We are going for an 8-day winning streak, 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Sonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, strong tech earnings are setting the stage for stocks to rally for an 8th straight day.
Coming up next, Apple and Amazon headline the busiest earnings day this quarter, with companies worth a combined $9 trillion reporting numbers today.
And uncertainty remains the buzzword as corporate America seeks clarity on Trump's tariff strategy. All of that and more coming up. But let's take a look at some of those stocks, because Microsoft cloud growth surged last quarter. It did slow down spending for its data centers that are crucial to its AI ambitions, not slowing down the stock at all, up 9% pre-market.
So Meta, Facebook, Instagram, quarterly sales beat estimates. The company raised its AI CapEx plans as well for the full year. The shares are up 7% in the pre-market.
Got another Mag 7 name. Apple, though, down pre-market. It reports after the bell. Overnight, a federal judge ruled that its app commissions are violating a court order, Katie.
And as we count down to Apple and Amazon, the Magnificent Seven earnings so far have been mostly positive despite global market volatility, with Meta CEO Mark Zuckerberg confident in his company's position.
We've had a strong start to the year. Our community keeps growing, with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty.
Let's discuss now with Bloomberg Technology co-host Caroline Hyde. So we got Microsoft, we got Meta last night, and the stakes were high in terms of broader market sentiment, and it looks like the two of these did deliver.
And they're both going to wipe away the stock market losses of this year. If we hold on to these gains, boom, they're then flat, if not higher for the year if you're looking at Microsoft. This is such a relief. You're seeing such a relief that not only are more and more people are using Meta, more and more people are using the AI that they offer to build ads on them. They're able to charge more for those ads, and they're sticking with the Meta, with the alphabets, despite these market uncertainties. The fact that Meta was able to give guidance, resilient guidance of growth, we're still going to see revenue up about 14% in the next fiscal quarter. That is why you're seeing this relief rally. And notably, you're also saying, look, we're still building in on that CapEx. We're going to raise that from $64 to $72 billion. Look, that's where the tariff hardware hit comes in, because infrastructure, lots of it, hardware coming from abroad, going to be impacted by tariffs, so they're going to commit to still rolling out their overall compute needs for themselves. That's going to cost more. When you're looking at Microsoft, they are, unsurprisingly, perhaps a little bit more conservative in terms of the spending on capital expenditure. They say it's still going to grow, but not to grow as fast as it has been in the past. And in fact, for the first time in a couple of years, we saw capital expenditure just come down a little bit in the previous quarter, $24.1 billion. But again, Amy Hood really showing that resilience, able to give a forecast. People are still turning to Azure for their compute in this market.
They're crushing it. Massive gains in the pre-market for the M's. The A's are up next, right? Apple and Amazon. So what do we expect?
Well, I'd also think we should turn our attention to what just happened in Apple. In pre-market moves will be lower because they got a crushing defeat in terms of the courts. This is the epic battle that has been going on for more than 4 years with Epic Games. This is Tim Sweeney finally winning out once again, as Apple had appealed, saying, look, you cannot keep charging me the commission that you were asking me when I'm going off of Apple's App Store. Now, the judge here is saying that Apple, in many ways, is in some ways potentially a criminal act here. They're saying that you lied under oath, that you've been, in any case, been trying to be anti-competitive. This is a big blow to Apple, I think, from the App Store perspective. So keep that one in mind. But look, we're likely to see a lot of pull forward. You're going to have a lot of people rushing out to get their iPods, to get their AirPods, I should call them. No one gets iPods anymore. But their AirPods and their iPhones. So there'll be a resilient set of numbers for Apple, I think, going forward. But what will they guide? How will they manage to give a picture of what the next quarter looks like when they're moving all their infrastructure build really into India at the moment? Apple's going to be one to me, and Amazon, boy, that had a tough week as well, didn't they? Remember how we started with the eye of the storm coming from the White House? What will they say in terms of tariff impact on consumer sentiment? Cloud probably still going to be strong.
All right, Caroline, thanks very much. Caroline Hyde is the co-anchor of Bloomberg Technology. You can catch her program at 11. Obviously, they're going to be highlighting all of these earnings beats as well. I want to switch gears, though, now to automakers. GM has slashed its full-year guidance after revealing a $5 billion exposure to auto tariffs. The news is one of the biggest financial hits revealed by any company from President Trump's trade war. Obviously, it's far worse than when Ford said it was going to take a $4 billion hit for its EV investment. Joining us now to talk about this is Bloomberg's Keith Naughton out of Detroit. So General Motors really taking a hit, Keith, from these tariffs.
Yeah, they certainly are, Matt. $5 billion is a lot of money. It's interesting, though, because analysts a week ago, before the tariff relief that Trump delivered on Tuesday, were saying GM would take a $10 billion hit. So it's not as bad as first feared because of this recent auto tariff relief, but still quite bad. And they also say it's going to lower their earnings for the year.
I also want to talk about Ford, Keith, because you did see them come out and say that they won't increase the price of vehicles until they see what rivals are doing. How do we expect the industry to be reacting now that we know a general sense of the costs?
Yeah, and GM just on its call said that it's also holding its fire on price increases. These changes in the auto tariffs are causing the whole industry to rethink. Ford had earlier told its dealers that it would start adjusting prices in May. But now they're saying they're going to hold off. They're going to see what their competitors do. It's going to be an interesting summer for the auto market because if the prices do go up, these very go-go sales that we've had this spring will certainly slow down.
All right, Keith Naughton, we appreciate your reporting. We do want to bring you some breaking news right now. This coming from the retail sector and Kohl's. The shares are halted right now for news pending, and we just got the news. Kohl's announcing that the board has terminated its CEO, Ashley Buchanan, for cause. According to the company, Buchanan violated company policies, and this investigation was conducted by an outside counsel. Now, in the meantime, they have named Michael Bender as interim CEO, but the board will initiate a search to identify a permanent CEO. So just to read you that breaking news headline once again, the board of Kohl's has terminated its CEO, Ashley Buchanan, for cause. Shanali.
And we are going to switch gears now. We're going to go back to the earnings season because over in healthcare, CVS boosted its profit outlook, and it also negotiated a deal to make Novo Nordisk's Wegovy more available to its members in a blow to Eli Lilly. Let's discuss this with Bloomberg's Madison Muller. This seems to be the trend, keeping prices low, making the drugs more available. Matt Miller is smiling somewhere, I think.
Exactly. I know we've talked about this already this week. This comes on the heels of Novo announcing deals with telehealth companies earlier this week to sell its drug Wegovy for half the price of its U.S. list price. And now they've negotiated a deal with CVS to do the same thing in retail pharmacies. CVS operates 9,000 retail pharmacies nationwide. So patients who go shop at those pharmacies now will be able to get Wegovy for half the price, more than half off the price. And then they are also negotiating a deal with CVS's drug benefits unit, which works with insurers to manage drug benefits for their health plans. And so companies and insurers that use those, that have health plans that are managed by CVS, will be able to pay less for the drugs. So it effectively saves them money and makes Wegovy more widely available.
Let's focus on Eli Lilly a little bit more specifically here, because it feels like they got a double whammy this morning. I mean, CVS announcing a plan to drop Zepbound, their version of weight loss drugs. And then you also had them report, and they beat on earnings, but the guidance was tempered a little bit. And you can see shares moving lower right now to almost 5% in the pre-market. Exactly.
The expectations for Lilly are just so high. And that was sort of the sentiment this morning, is people expected them to raise their guidance. They ended up cutting it, which was not... It's a little bit tricky because they cut it on research and development costs, not because of any real impact. And so they, investors were looking for a better result for them this morning. And even though they beat, it was just not enough to satisfy them.
All right, Madison, thanks so much for joining us. Madison Muller talking about the continued news on weight loss drugs and a combination with, or I guess a joint venture, in a sense, cooperation with CVS. We're watching a number of other companies moving after earnings. McDonald's sales slumped on consumer anxiety. I think same-store sales were down 3.6%. The shares are off 1.33%. Harley-Davidson shares are up. But what a disappointing slate of numbers from the MoCo out of Milwaukee. I think global shipments dropped to 38,000. That's a 33% drop. They sold 33 live-wire electric motorcycles in the first quarter. 33 globally.
Crazy.
Those shares are up almost 2%, but they have lost a quarter of their value year to date. And then Robinhood rising. Investors flock to the retail brokerage to trade the wild market swings. Obviously, this is good for Vlad Tenev's business. The shares are up 4.25%. He is going to join us at 10:30, so stay tuned for the Vlad Tenev interview this next hour.
Yeah, we also want to take a look here at Kohl's, as Katie had mentioned earlier in the breaking news, that they are terminating their CEO, Ashley Buchanan. They have cited a violation of company policies after an investigation by an outside counsel, and they are looking for a new permanent CEO. But this is the year-to-date shares, guys. It has been down more than 52%. Shares have been halted in the wake of the news.
Yeah, and the board also saying the company that Buchanan directed transactions with conflicts of interest. So we're looking for more details there. They also announced preliminary results. This company wasn't supposed to report until May 30th, but they came out and said that their preliminary comparable sales for the first quarter were between -4% to -4.3%. So a lot of bad news there. Shares still halted. We'll bring you the update once they start trading again. But coming up, Tesla denying a report that the EV giant is searching for a new CEO. We'll take a look under the hood next. This is Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. President Trump is acknowledging that his tariffs may result in fewer and more expensive products.
He said, oh, the shelves are going to be open. Well, maybe the children will have $2 instead of $30, you know? And maybe the $2 will cost a couple of bucks more than they would normally.
Many American toy makers and retailers have started to pause their orders as the effects of the tariffs threaten to hit supply chains. Roughly 80% of toys sold in the U.S. are made in China, according to the Toy Association. Now, chip giant Qualcomm is sliding in early trading after giving a tepid revenue forecast. The outlook is renewing fears that the smartphone maker will suffer from a looming trade war. Qualcomm is seen as highly vulnerable to the tariff fallout, given that nearly 46% of that company's sales come from China. And Tesla chair Robin Denholm is denying a Wall Street Journal story that reported the board was looking to replace CEO Elon Musk as investors worried about the amount of time he was devoting to his role in government. In a post on X, Denholm wrote, quote, earlier today there was a media report erroneously claiming that the Tesla board had contacted recruitment firms to initiate a CEO search at the company. This is absolutely false, end quote. The CEO of Tesla is Elon Musk, and the board is highly confident in his ability to continue executing on the exciting growth plan. I guess the quote ends there. Sorry, Shonali ended it too early, but definitely a denial.
Definitely denial. We're going to bring in now Bloomberg's Max Chafkin for more on Tesla, and this denial of this Wall Street Journal report was interesting, particularly because you've seen the chair, Robin Denholm, be very silent on this issue before, regardless of analysts after analysts and many other investors saying that maybe Musk is pretty distracted. Maybe he should return to one job.
Yeah, I mean, if this were a normal company, I think a CEO search would probably be, totally expected, right? You have wild swings in the stock price. You have a CEO with multiple jobs, a lot of controversy. Like, of course they would be considering their options. But Tesla, of course, is not a normal company. We got to remember, this board has been trying to pay Elon Musk an enormous amount of money. It's been having this huge fight with Delaware courts over a $50 billion plus bonus package, despite the fact that when you look at the stock price, right, it hasn't exactly done well in recent years. So this is a board that is very much behind Elon Musk, and an investor base that is very much behind Elon Musk. So it's not totally surprising that they're coming out and saying, hey, nothing to this story, let's on to the next.
And you talk about the investor base, and We certainly saw that when he said on the earnings call that he was going to spend significantly more time on Tesla. The stock soared after that. So talk us through the next month, because now, I guess we're in May. It's May 1st. Now is theoretically when he would start stepping back from Doge.
Yeah, I mean, it's not clear to me how much stepping back there really will be. Elon Musk was at a cabinet meeting. He was wearing 2 hats, which, now seeing this Wall Street Journal report maybe seems like a wink or something at the idea that maybe he's wearing too many hats. He shows up to a Trump cabinet meeting wearing 2 hats. President Trump says you can stay as long as you like. I believe later today he's going to do an interview on Fox News. So, he is still going to be engaged in politics. What he is saying, if you look at it closely, is he's no longer going to be essentially camped out in the executive office building, which I do think is going to be a good sign for Tesla shareholders. But if they're hoping to avoid the kind of negative brand associations, these protests, the anger that we're seeing, that I don't think is going to go away.
All right, Max, thanks so much for joining us. Bloomberg's Max Chafkin talking about Elon Musk in this picture wearing a hat that says Trump was right about everything. And I wonder if he still feels that way when he looks at how the tariffs are affecting his car sales. In terms of Ford's car sales, they rose 16.2% in this country in April. The company said U.S. sales were boosted by Ford's employee pricing for everyone discount campaign. So we continue to get car news, and global trade, it turns out, is cars. Cars is global trade.
Certainly, and we're going to keep a close eye on that auto sector, but we're also going to keep a close eye on some more movers on our radar. We're looking at NVIDIA because the CEO had asked Trump to change AI export rules, but of course we also had those big tech earnings last night that were very promising. So you are seeing NVIDIA on the rise this morning, almost 4.6%. Roblox up 7.3%. They reported a larger than expected jump in active users for the first quarter. Daily active users rose 26%. Also watching MasterCard up about 1%, but remember, people are watching consumers very closely, and revenue topped estimates even though purchase volume missed. Katie.
All right, so that's some of your pre-market action. We're about 10 minutes away from the opening bell, and we're going to begin today's trading day with Laffer Tengler's Nancy Tengler coming up next. This is Open Interest.
I think COVID is probably somewhat of a proxy for this. Maybe the important difference being, we had this massive uncertainty sort of freeze activity. But at that time, we kind of knew not only what the solution would be, health-related solution, vaccines, but also massive, massive stimulus, both of the fiscal and monetary variety. Now, when you don't really know the rules of the game, trying to gauge, okay, what ends this?
That was Liz Ann Saunders from Charles Schwab speaking on Bloomberg Television this morning. And let's keep the conversation going now with Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, great to see you again. I think Liz Ann makes some really interesting points when you think about COVID being a proxy to this period, but it's unclear what the solution would be when you think about the tough economic data we got yesterday morning. I mean, you can't really envision a scenario where the government would come out with stimulus. It's unclear whether Fed rate cuts would help, and I don't know what a vaccine would do here. So in your view, what turns this ship around when it comes to some of the worrying signals in the economy?
A vaccine against tariffs. Yeah, thanks, Katie, for having me. I think she's right. I think there are a number of analogies, but I think what we're getting as an inoculation is we're getting much better earnings than many expected, including me, across the board. I mean, we were optimistic about earnings, but I've been happily surprised. And the guidance, importantly, has been decent and in some cases really good. And so I think that's one of the things that has catalyzed stock prices. We've gotten less chaotic messaging from the White House, so there seems to be more strategic understanding and communication, and I credit Scott Bessent for that. The Fed is on the sidelines, so I think you're right. I don't think we'll necessarily get a cut, but I think as investors, we need to always be looking forward. And what I heard a lot of my colleagues saying in the industry was that the AI trade was overdone. And I think what we're hearing from the likes of ServiceNow and Microsoft is that it's not even close to being done. And Google and Meta are still spending, reiterating their CapEx budgets. So I think all of that is bullish, and that when we begin to see the sort of tariff stop, will be good.
I'm glad you brought up Scott Bessent. He said earlier, I think he was on either Fox or CNBC, that because the 2-year is so far below the Fed funds rate, it means that they should cut. He's jawboning Jerome Powell as well. And here you see how far down we've come on the 2-year. Neil Dutta from Renaissance Macro put out a note earlier. The Treasury Secretary knows how to feel the market. He says wage and salary growth is running below the level of the Fed funds rate as well. That's a sign that past policy has already been too tight. Why doesn't Jerome Powell just come out and cut? Inflation be damned, Nancy.
Well, I actually agree with Neil, and we've been really vocal on this. The Fed chairman has been 100% wrong at every turning point. And I think that when I make mistakes, it engenders humility, and I make them every day. But there is no humility from this Fed, and he's right. Real wages, real rates. This would be a good time, as opposed to August and September when we cut 50 and then ultimately 100 basis points, and the 10-year rose. So 100 basis points. So I think the market has expressed a lack of confidence in this Fed, and I think the stubborn sort of heels dug in. We're going to wait for the data. That just means, that guarantees they're going to be too late.
Nancy, you're going to stick with us through the open, but before we get there, let's get a check, Katie, on these markets.
Yeah, we got green on the screen. It is going to be the first official trading day of May, continuing that rally that we've seen. Somehow April was actually a really quiet month. If you just take a look at the monthly performance, down only 0.8%. We saw some pretty amazing intra-month action there, but all things considered, pretty quiet overall. You can see the S&P 500 up 1%. It's big tech that's leading the charge today on the biggest earnings day of this season. We'll bring you the details next at the opening bell. This is Open Interest.
Moments away from the start of trading, and futures are very positive, more than 1% on the S&P 500. You can see the gains on the NASDAQ, 1.6%, as tech earnings come in strong. Meta and Microsoft really knocking it out of the park, moving higher in the pre-market, and we're waiting to get Apple and Amazon after the bell. You hear the opening bell, and down on the New York Stock Exchange, you've got a company, Core Molding Technologies, out of Columbus, Ohio. Probably the greatest city in the greatest state of the nation. It's worth like $100 million. And then down at the NASDAQ market site, SkyCorp is a Chinese company that's very excited to ring the bell there as well. They've had a lot of Chinese companies at the NASDAQ. Maybe they're trying to, a solar company at that. So Chinese and green, Katie. I wonder if they're trying to make a point.
Yeah, it's an interesting mix, but I want to get to Kohl's. This breaking news in the last 20 minutes or so that Kohl's says that the board has terminated CEO Ashley Buchanan due to undisclosed conflicts of interest involving a vendor. So firing him for cause. Shelly, he only joined earlier this year. You can see the shares are up about 6% right now, so traders clearly reacting positively.
Also some positive news here. You have some big tech on a tear. Microsoft cloud growth surged last quarter, but it did slow down spending for data centers, crucial to its AI ambitions. Yet you see Microsoft up more than 10% at the open. Meta quarterly sales beat estimates and raised its AI CapEx plans for the year. They say it's getting more expensive out there. It's up, though, almost 8% at the market open, Matt.
All right, so there you have, Shanali brings us the M's. I'm looking at the A's. Going to report after the bell, Apple and Amazon. And overnight, speaking of Apple, a federal judge ruled that its app commissions violate a court order. Essentially, that Apple breaks the law. Essentially, that Apple is doing illegal stuff. So maybe that's why you see the shares down early in the trading. Amazon right now up about 3%, Katie.
All right, let's dig into these earnings with Bloomberg Technology's Ed Ludlow, who's sitting to my left in New York City. It's great to see you.
At least you don't pretend that I'm not seeing you, Laffer. I remember last time I was in New York, Matt's like, he joins us from, New York City. Well, thank you.
We're always glad you're here.
Thank you.
Yeah, it is.
It's too rare.
A unique privilege to speak to you today on the biggest earnings day of the earnings
probably
season.
is, yeah.
Apple, Amazon coming up after the bell. Like Matt said, we had the M's knock it out of the park last night. What are we expecting from both of these companies? Because there's a lot of drama surrounding both of them this week.
No, I think we start with Apple, and it's just tariffs related, right? Apple makes consumer electronics and electronics generally, and those are physical things where components come from all over the world and are assembled largely in one place, China, some in India. And so we talked a lot about the impact of tariffs on largely bottom line, actually, if you think about how it might pressure margins. But the tariff as a levy is one thing. The trade implications of moving parts from one place to another is an operational risk. And so how Apple talks about supply chain adjustment going forward, the movement of components from place A to place B and the final product from market A to market B, I think that we'll learn quite a lot. Tim Cook often says, I am not an economist, but you'll also get that macro readout as well.
I want the skinny on Amazon because a fair bit of drama this week already with the scuffle with the White House and then them saying they will not post those price increases relative to tariffs. But that doesn't mean per se that they won't happen, right?
Yeah, Amazon is much more analogous with what we saw from Alphabet and Microsoft and Meta, right? The story for those three names is the core business strong, top line growth, supported by AI investment that justifies further capital expenditures growth. Amazon's the same. The cash cow of that business is its cloud unit, AWS. They're the number one player in that unit. But there will be a tariff discussion because what is Amazon.com? Again, it's the movement of goods from one place to another, and there are cost implications and logistics implications on the consumer. And you're absolutely right that they denied that report from Punchbowl, but conceded it had been a consideration for Haul, which is products basically below $20, labeling it, saying, by the way, this is how much tariffs are hitting you on this product. That ain't happening, though.
Ed, great to have you here. Look forward to your program, Bloomberg Technology, at 11. I want to get back right now to Laffer Tengler, CEO and CIO, Nancy Tengler, and talk a little bit about Amazon, Nancy, Walmart, places we would normally see consumers flock at times of trouble. But what happens when these tariffs kick in? Target, do you start to see empty shelves? Do you start to see rising prices?
Well, Matt, I think it was great listening to Ed, by the way. I think one of the things that we saw in the GDP report is that there was a pull forward of goods purchases and imports. So whether we see that in the near term or not is yet to be determined. But I like where Amazon sits. It's a member of our 5 for 25 and our 12 best ideas portfolio. If they disappoint on earnings, which I doubt, I think, but if they do, then we'll be in buying more, just as we were with Microsoft earlier in April. We bought, we added to our holdings at about
Nancy,
$370.
Can I double down on this? Because, you look across Amazon's website, almost everything that they sell is Chinese, right? There's just a collection of consonants that make up a name you can't pronounce for everyday products. They're all out of China. I think I saw something like 70% of their products are Chinese. Why do you want to buy that in the era of Donald Trump?
Well, I think you want to buy it for Prime, you want to buy it for AWS, and you want to buy it for advertising. There will be, this is a multifaceted company. So to your point, we may see prices rise. Amazon is still about 15% the low-cost producer compared to other companies. And so, it may benefit Walmart, which we also own. But I think you have to look at the company in toto, and they've been really cutting costs, focused on eliminating bureaucracy. This too shall pass. There's probably going to be some carve-outs, as we know, in the negotiations with the Chinese, but they will resource, and it will take some time. But that isn't any different really than what we see from Walmart. They also get a good chunk of their suppliers come from China.
We can see Amazon shares rallying right now in anticipation of earnings. Looking forward to that after the bell. But Nancy, I'm so excited to talk to you about Tesla and Elon Musk. Of course, the Wall Street Journal reporting that Tesla had initiated a search for perhaps another CEO, and then the board chairwoman came out and denied that. At the end of March, we spoke to you, and you had mentioned that you recently added to Tesla. So as an investor in this company, I wonder what you make of Elon Musk's role in the government and role at Tesla.
Yeah, Katie. Well, so we added, I think, on March 10th, and we already owned it, and we acquired it at about $240 a share. That to us was a good entry point for the name. In the last conference call, the earnings were dreadful, but Elon announced that he was, going to spend more time in the company, and just on a narrative basis, that is positive for the underlying shares. I think you own this stock for the energy business. Yes, they have to sell cars, but full self-driving and AI in general is really what's going to drive this company into the future and the stock price. So anytime we get a chance to acquire it at a reasonable valuation, it's not reasonable compared to other stocks, but compared to its own name, then we step in. But we were actually selling in January in the mid threes because it is a volatile stock, and you do have to be nimble around the edges.
Nancy, I want to pull up a total return index of the Magnificent Seven because you are seeing a little bit of change. You are seeing Microsoft now in the green, but it is the only stock in the green for the index. You are looking at Tesla being the worst performer of that index, down almost 30% on the year. You talked about the ability a little bit to buy on the edges here. But of the group, what else would you buy given the discounts that we're seeing?
Well, I think Meta looks interesting here. As you know, we had sold that stock and added Spotify instead. And that's been a great decision. They're not all great, by the way, Shanali, but that one worked out pretty nicely. I think you want to pick away at NVIDIA here, and we added at the same time that we added to Tesla, we added to NVIDIA, and I think it was around $108 a share. And so if you're looking out 2 to 3 years, that's probably a name you want to own. Again, the tariffs, the bans, all of that I think will get resolved. And what we're seeing from the Mag 7 in terms of CapEx spending is they're not just reiterating. In some cases, like as in Meta's case, they're increasing CapEx. That's going to benefit NVIDIA ultimately as we look around all of the sectors. We're hearing it from companies that they are investing in AI. So I think you could add to Google here relatively attractive valuation, and those are the things that we've been doing.
All right, Nancy, great day to have you on as we look at the biggest day for earnings this quarter, the market up for an 8th day in a row. Really appreciate your candor and your humility. Nancy Tengler there from Laffer Tengler. Now, some of the movers on our radar today include General Motors. That company slashing guidance, saying that tariffs are going to cause a $5 billion hit in 1 year. And yet Mary Barra still thanks President Trump on CNBC. CVS Health up 6.5%, raising its guidance for the full year profit.
Can we meditate on that? CVS raised guidance. Do you know how rare that is in this earnings season? You can see it being rewarded in shares. I do want to point out that CVS is up 60% on a total return basis this year alone. Of course, They were beaten up pretty mightily, but definitely one of the year's dark horses.
Very welcome reprieve after 3 years of declines, including 43% last year. But this is a turnaround story underway.
Yeah, one that's actually working.
And then you can see Shake Shack, my favorite place to secretly go after work. Thank goodness my wife doesn't watch this program. Up 4.33% right now. Shake Shack shares have been hit hard, down, I think, 35% year to date, but it sees slow single-digit sales growth in 2Q, and investors like it.
Yeah, apparently. So definitely some silver linings that traders are finding when it comes to Shake Shack. But coming up, Apple's earnings test. We'll discuss what to expect after the bell with Craig Moffett of Moffett Nathanson next. This is Open Interest. Welcome back to Open Interest. A check on the stock market right now. That rally still underway. This is the first trading day of May, and this month is off to a good start. The S&P 500 higher by about 0.9%. Big tech leading the way higher, with the NASDAQ 100 up 1.4% after what we heard from Microsoft and Meta after the bell last night. But Sonali, now the focus is on the A's coming after the bell today.
And one of those A's, Apple. They will deliver results after the close, and shares are down in the early trade after the company suffered a loss in court related to its App Store sales commissions. The judge presiding over the case said that Apple intended to create new anti-competitive barriers and thought that it could get away with it. We're joined now by Craig Moffett, founding partner and senior research analyst at Moffett Nathanson. Craig is a rare bear on Apple. There's a lot to talk about here, including how people are buying phones to get ahead of the tariffs. But these legal cases alone, how much of an issue does this create? Because you do have a federal judge in this case deferring the company to prosecutors for a possible criminal probe in this matter.
Yeah, good morning, Sonali. You're right. This is a significant issue, in part because the part of Apple that investors seem to be most excited about for the last few years has been services, and this case gets at a very specific plank of Apple's services revenue, and that is charging companies for, or I should say, prohibiting companies from working outside of the Apple platform for handling payments and subscriptions and that sort of thing, and taking a significant cut of the revenues that come because of that prohibition. So the fact that that has been called illegal is potentially material. I would point out, though, it's only one of two really significant cases, and that's before we get to the antitrust cases against Apple itself. The one that we've been watching really carefully is the Google antitrust case, where the payments that Google makes to Apple, which represent about 25% of Apple's operating income, have already been called illegal by the judge in that case, Judge Mehta. And where it's important to note, the current administration has specifically declined to withdraw their own recommendation that those payments be stopped. So it's been striking to us that as that case has developed, and that first you had the finding that the payments were illegal, and then you had the recommendation from the courts that those payments should stop, that it hasn't really been reflected at all in the stock price.
Yeah, $20 billion is not an insignificant amount of payments, even for Apple. Craig, why are you such a rare bear? I mean, I look at the Bloomberg terminal ANR function, and I can see that there are only 3 sells on this company out of 60 analysts. How come this market is so hesitant to say get out of Apple?
Yeah, good morning, Matt. You know, first of all, I would say I am not a bear on Apple. I think I have a tremendous amount of respect for the company. I love the company's products just like everyone else does. My concern has been from the beginning that the valuation for Apple is out of line with its growth expectations. That's, you know, when we moved to a sell rating in the beginning of this year, Apple was trading at something like 2x the PEG ratio of the rest of the Mag 7. So as tariffs the tariff story has developed since April 2nd, tariffs have become almost the only thing that people pay attention to with Apple. But there's some longer term questions that are reasonable to ask about Apple's growth rate that suggests that the valuation was simply too stretched for a company with the kind of growth profile that Apple has, not just now, but is likely to have for the next few years.
Yeah, it's a fair point. I see Apple's PE ratio trading at just around 30, so still quite elevated. Craig, unfortunately, we have to leave it there. Really appreciate your time this morning. That is Craig Moffett, Moffett Nathanson, founding partner and senior research analyst. This is Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller, and we're seeing another great day for stocks. 8 in a row. It's going to be the longest winning streak since at least November of last year. The S&P up a solid 1% right now. The NASDAQ 100 up 1.5% after tech companies, the M's at least, knocked the cover off the ball. I'm talking about Meta and Microsoft. You can see Facebook is up almost 5%, Microsoft almost 10%. And then you've got, well, General Motors says that tariffs are going to take $5 billion off its bottom line this year. That is not an insignificant amount of money. The shares are only down 0.5% after the CEO thanked President Trump on CNBC. Harley-Davidson said it only sold 33,000 motorcycles to retail customers. That's down 21% in the first quarter. Only 33 live-wire electric bikes. But the shares are up 4%. Okay, they lost a quarter of their value this year. CVS, as Katie pointed out, raised its outlook. Tremendous day for those shareholders, up more than 7%. And then Kohl's up 3.5% after it looks like, Katie, they got rid of a bad apple from the bunch.
Yeah, let's talk about that. As we reported earlier this hour, Kohl's has terminated its CEO, Ashley Buchanan, because of, quote, vendor transactions that involved undisclosed conflicts of interest. So fired for cause. Let's get more insight now from Bloomberg's Shelly Banjo. So, Shelly, it's surprising to see any CEO get sacked. This is made more interesting by the fact that Ashley Buchanan just joined Kohl's a couple of months ago.
Yeah, just a couple months into his tenure here. We're seeing a lot of detail from this board investigation, talking about how he pushed the company to do business with this vendor that he had a personal relationship with. We don't yet know this nature of the personal relationship, but that he directed multi-million dollars of business to the vendor.
It's a really tough time for Kohl's to go through this. The stock has already been down 50% this year. What are the challenges the company is navigating as it looks for a new permanent replacement?
Yeah, I mean, the company replaced its CEO because they weren't doing very well. And then as soon as the Ashley Buchanan took over, they decided to cut 10% of their corporate staff. Sales are already low. You're trying to do a turnaround right as the economy is starting to crater. Consumer demand is going down. The macroeconomic environment is clearly terrible. So it is not good news for this company, but the stock, of course, went up because I think it shows the board, seeing something, saying something, doing something about it.
It moved quickly.
Yeah, very
moved quickly, and Katie points out, 12 straight quarters of revenue declines. Clearly, they had to bring in somebody. They thought this guy was the superstar, obviously, because they paid him $20 million for this year. He's going to lose some of that money.
Yeah, I mean, I haven't quite looked at if they've disclosed yet how much he's going to lose or if they've come out with that yet. But yeah, I mean, might be the shortest tenure of anyone ever. I'm going to have to check.
He's the Liz Truss of retail CEOs.
Exactly.
Yeah, so, I mean, as we keep talking about, you just think about the retail landscape overall right now. Kohl's, it seems like, has some pretty idiosyncratic issues, to put it mildly. But give us a lay of the land. When you think about the overall landscape, obviously, I have to imagine every C-suite right now is trying to figure out tariffs.
Yeah, I mean, we've had a really early read into earnings so far this season. Every single company has talked about the macroeconomic environment, some saying a bigger impact, some saying a lesser impact. But you're seeing McDonald's today. We saw JetBlue. We're seeing GM. All these companies saying the consumer backdrop is bad. People are starting to spend less. Prices are going up. This is going to get even worse, and we're going to have some more data on jobs coming up to see how that's going to translate. So it's not a great time for you to be losing your CEO. I will say they immediately named their interim board member, Michael Bender, to step in. He has a long track record of retail history. He has had a number of jobs in retail, and so maybe they'll pull it out. Let's see.
We will see. And it's really interesting because even though you have Kohl's down that much this year, you actually have others. TJX, Walmart, actually up on the year. So a lot of catch up to do there. Shelly Banjo, Bloomberg managing editor for Global Business. We're watching some more movers on our radar as well. We've been talking about it this morning. Tesla denying a report about a CEO search to replace Elon Musk. You do have Tesla on the rise, about 0.8% this morning. NVIDIA more so, 4.2%, 3%. Interesting moves, of course. They are looking for some reprieve from the White House, but also you have the big tech companies doing well. Qualcomm, though, down 8%, more than that. They're offering a tepid forecast. We are knee deep in it, guys. It is the busiest day of earnings season today.
That's right. It's all about tech earnings today, and we're up another 1%. So 8 days in a row of gains if we hold through the end of this Thursday. Coming up in the next hour, Morgan Stanley's Sarah Wolfe, the CEO of Robinhood, Vlad Tenev, and the CEO of Mizuho USA on the LPGA. We are 30 minutes into the trading day on this Thursday. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shanali Bassick.
And I'm Katie Greifeld. We have some eco data dropping at 10 a.m. on the dot. Here's the setup in markets as we await those numbers. You can see the S&P 500 still higher, off session highs up about 0.7%. Big tech still in the driver's seat with the NASDAQ 100 leading. We do have these ISM manufacturing numbers for April coming through. And it's a little bit higher than expected. Let's get now to Bloomberg's Michael McKee. What's the first read?
Well, the first read for ISM is 48.7, which is contraction. It's down from 49 last month, and it's a little higher than the 47.9 that was expected. I'm not sure how you exactly predict these sort of diffusion indexes. But the numbers that matter, new orders, 47.2. That's up from 45.2. There was a feeling that we might see new orders crash even more given the tariff situation. It's still, as I mentioned, contraction. Production, 44. That falls from 48.3. So we do see perhaps some cutbacks by companies there. Employment, 46.5 from 44.7. All these numbers are in the 40s for the most part, so it does signify contraction overall, but that's a little bit better than it had been. Inventories, 50.8 from 53.4, so inventories have declined a little bit, and that still adds to that mystery of where did all those imports go. And then prices paid, the one that everybody watches every month, 69.8 from 69.4. Not a huge increase, but an increase. It does suggest prices are still going up for the inputs that companies use to make things. So not a particularly good report overall, even if we're fractionally better on a few of the subcategories.
Yeah, the market doesn't really think so either. You're at session lows pretty much on the S&P 500, and you have that ISM factory production gauge at the lowest level since May of 2020. So a lot of 2020 comparisons popping up here. Mike, how do you put this number into perspective of all the other data we've been getting this week?
Well, this is also a sentiment index, but it's a little more closely tied to what companies are actually doing, so it doesn't suggest that things are going very well. It's not worsening, but I'm looking through the comments that respondents to the survey had for the ISM folks, and every one of them mentions tariffs and the uncertainty from that. So it's obviously a weight on what's going on in the manufacturing world. We'll see how that translates into actual production as the month goes on.
All right, Mike, thanks so much for joining us. Bloomberg's Chief Economics and Policy Correspondent Michael McKee talking to us about the data. Joining us now to parse through market responses, Sarah Wolfe. She's senior economist at Morgan Stanley Wealth Management. So I guess it's not unexpected to see factory orders at the lowest level since March of 2020, did you say?
May of
2020.
Close.
But what do you make of the rest of the data?
So if we look at the GDP data that we got yesterday, it was pretty backwards looking. It's what all these manufacturers, all these businesses and consumers were trying to do ahead of tariffs, front loading. So we saw a surge in imports. Some of that was reflected in inventories. I think we're likely to get upward revisions in inventories because if some of these imports were coming in at the end of March, we have a hard time putting that into the GDP data. But forward looking, we're going to start to see this decline in new orders, this decline in production start to come through in the hard economic data. And so we need to discount a little bit the first quarter. And I think that's what the Fed will do as well. Private final domestic demand was 3% when you get rid of inventories and imports. It's pretty darn good. But next quarter, it's likely not going to be anywhere near 3%. And that's what we're seeing the forward-looking indicators in ISM manufacturing say.
So we need more data when it comes to the economic landscape. We're going to get a bit more data when it comes to labor market tomorrow, of course, we get the jobs report. You recently trimmed your forecast for April. Talk us through that a little bit.
Yeah, so markets and as well as Morgan Stanley economists are expecting somewhere around 130,000 for payrolls tomorrow. That's going to be pretty notable slowdown from the nice report that we got last month, over 200,000. Part of that is going to be reflecting the slowdown in federal hiring. We're likely going to see some layoffs in federal hiring coming through that report. And then we're going to see more broadening in some of the services sector slow down as well. Risks to the report, I think market risks are two-sided. If we get an upside surprise, I would not be surprised if markets discount it as backward looking. If anything, payrolls may still be supported by the front loading of economic activity, right? Because we saw retail sales accelerate into the end of the first quarter, industrial production accelerate, and now with the 90-day negotiation period, we're seeing businesses continue to ramp up front loading into April. So that might support payrolls a little bit.
Now, you've seen a lot of data so far that's been kind of bad news for the economy this week. And because of that, you are seeing more than 4 rate cuts baked in this year. Yesterday it was 4.1, now it's 4.3. So you can see traders adding on to the bet. Now, weigh in here on this Besant versus bond market dynamic, because those cuts do not really start as the market expects until July. Yet you do have both now the president as well as the Treasury Secretary saying that the Fed should be cutting. The Fed should have already been cutting. What do you think about this?
So I think it's going to take a little bit of time to get the data for the Fed to feel comfortable cutting. Right now, the Fed is very focused on the inflation side of their mandate, especially because inflation expectations have been rising significantly and tariffs have yet to hit. And Powell has not shifted his communication away from the inflation side. And so we need to think about what amount of data are we going to get between now and July. Couple more prints and might not be enough to show a meaningful economic slowdown. I'm more convinced that cuts, if they at all come, are going to be backloaded in the year.
I just want to highlight this chart again. Scott Besant, as Shelly pointed out, said that the 2-year yield is below the Fed funds rate, and so that means the Fed should cut. But if you look, Joe, can you bring it back up? If you look closely at that chart, the 2-year yield has been below federal funds rate since like the end of 2022.
Yeah. And you can argue, I mean, that people are buying the 2-year because they feel safer in it than the 10-year, can't you?
100%. And I think this is when we go back to our prior discussion about Besant, even though the 2 years coming down, that might be signaling the Fed should cut because of the recession risk, which is not really a good reason the Fed should be cutting. Longer run rates could continue to edge higher. We could see a steepening in the yield curve, especially this summer, as we start to get news on the Tax Cut and Jobs Act, because that's going to be deficit widening. So we could see longer run rates, which I think Besant cares about even more, move higher, and that's definitely not going to make him happy.
Wouldn't it be nice, though, Sarah, I mean, with your economist hat on, if the Fed cut rates and averted a recession, rather than waiting for a recession to cut rates?
It's impossible to do it when we're in this type of inflationary scenario, right? They want to be front-footed, but we know from the Fed the last few years, they're data dependent, which means that they're always going to be flat-footed. They're going to be late to the game. And that's one of the things that really concerns markets. If they're flat-footed, it means we're likely going to be in a recession by the time they start cutting interest rates. And that's where some of the more aggressive pricing at the front end of the curve is coming in.
I mean, you also consider the dual mandate. Like you're saying, you could cut to avert a recession, but then you have inflation to worry about. And that's a very difficult needle to thread. It seems like the labor market is still holding up.
It's one the Fed hasn't been able to thread, right?
They've had some issues exactly threatening it. But you think about that you're seeing inflation expectations rise, at least when you take a look at some of the survey measures, maybe not as much in break-evens. Where do you stand on inflation and that dual mandate? Which side should they be more concerned about at this point?
I do think they need to be more concerned about inflation right now, especially if we're going to be getting this meaningful acceleration in the back half of the year. The reality is we don't know where tariffs are going right now. And even if we get resolve on tariffs in the next month or two, businesses, as we know, are already halting production and shipments. And so even if tariffs are resolved, we are still going to get a negative supply shock because we're going to see empty shelves in the next couple of months. And that alone will raise prices without tariffs. And so the Fed needs to be concerned about some of these ripple effects of how businesses are planning ahead of tariffs. And unfortunately, they've tried to make the call on a softening labor market and move to a more dovish stance, and then they've been wrong, right? Remember last summer, payroll slowed down, then things came back again. And so they don't want to preemptively guess where the labor market and the economy is headed.
I mean, it must be so hard. Imagine you're Tim Cook, Shanali, and you have 90% of your production in China, you move as much as you can to India. And then in Trump's third term, all of a sudden he makes India the enemy. Where do they go then?
Well, but even beyond that, the issue with these trade deals that a lot of investors and CEOs can't parse is even if they strike a deal in concept, when does that deal take effect?
Right.
How long does that take to implement? And therefore, how long does that uncertainty last that keeps Apple moving production and maybe not spending on jobs and manufacturing in the United States and other companies on hold or even planning on letting more people go?
And the reality is there was a good study that just came out that shows the average trade negotiation takes about 18 months to negotiate and even longer to implement. So whatever negotiations we get in the next 60 to 90 days is going to be patchwork, which does not give businesses a lot of confidence that this is the future of trade policy. It's just going to last until they could get better negotiations in place, which could take years.
Yeah, it's a good note to leave it on. That stable policy is needed for a lot of these corporate investment decisions. Sarah, it's great to see you in person ahead of tomorrow's jobs print. That is Sarah Wolfe of Morgan Stanley Wealth Management. Meanwhile, let's get back to these markets and take a look under the hood. We're in the thick of earnings season, and you have Microsoft higher after strong demand results indicated demand for cloud services holding steady. You also have Meta higher on stronger ad sales. Both of those stocks propelling indices right now. CVS too higher after negotiating a deal to make Wegovy more widely available to its members. That's a bit of a blow to Eli Lilly. Both of these companies reported earnings today, though. You had CVS actually raise their guidance. You don't see it too often. Eli Lilly trimming their outlook. That might also explain what we're seeing in the shares. And Kohl's, we've been talking about it for the past hour, higher after firing CEO Ashley Buchanan due to undisclosed conflicts of interest. Chairman Michael Bender taking over as interim CEO. Shares up about 5.6%. Now coming up, more earnings insight. We'll speak with the CEO of DigitalBridge, Marc Ganzi, about the company's latest results. This is Open Interest.
Let's get to high interest. Look what's making headlines around the world. Elon Musk is about to put his stamp on a new government. Residents of a small community near SpaceX's rocket launch site are voting this week on whether to officially incorporate the area as its own city called Starbase in Texas. The outcome is hardly in doubt. Almost all of the eligible voters work for the company. Musk owns a house in the 1.5 square mile area on Memes Street. He is all in on the plan to form a new government. General Motors is slashing its guidance after revealing a $5 billion exposure to auto tariffs. The news is one of the biggest financial hits revealed by any company from President Trump's trade war. Reports earlier this week, Trump issued what he's characterized as relief for car makers by lowering some levies on imported vehicles and parts. But even so, GM expects a massive hit to profit unless trade deals are cut. And just weeks after winning his first Masters title, golf star Rory McIlroy is teaming up with the investment firm TPG to launch a sports fund. The new venture, called TPG Sports, has an anchor commitment from an Abu Dhabi-based investment firm with about $110 billion under management. Once the domain of retired athletes, an increasing number of active stars, including Steph Curry and Kevin Durant, have launched funds to handle their personal investments while they're still playing. Katie?
All right, let's switch gears here and go back to earnings because, like its peers at Amazon and Alphabet, Microsoft has raced to construct enough data centers to meet spiking demand for generative AI training and tools. And one CEO who has a view on digital infrastructure spending is Marc Ganzi of DigitalBridge. I'm pleased to say that Marc joins us now. So, Marc, tell us about that spend. We saw Microsoft maybe alleviate some of the existential fears that have been out there, but from where you're sitting on the ground, what's your view?
Look, our view is that as we continue to grow the ecosystem around artificial intelligence, you're seeing the growth in the revenue models and you're seeing the growth in the applications. And all of that, as you know, Katie, requires the infrastructure behind it to power it. And so when you hear Mark Zuckerberg and you hear Satya and Amy Hood yesterday talking about how they're going to need more capacity come June, and you saw the guidance from Meta move up in terms of the CapEx spend, All of this leads to ultimately more infrastructure is required to power the AI economy. And when we translate it down at the data center level in terms of what we're seeing, in the trenches in building that infrastructure, our pipeline was actually up to 9.9 gigawatts of activity in this quarter. That's the largest surge in leasing activity that we've seen in the data center industry, and since we've been building data centers for over 2 decades. And just to contextualize that, Katie, our pipeline last year was at about 7.2 gigawatts, and today it's at 9.9 gigawatts of activity. So I know that it was popular to sort of take a dent at data centers in the last 90 days, and perhaps the bloom was off the rose on data centers and AI spending, but I can tell you at the street level and in the trenches, that's just not the case.
We appreciate the hard numbers there, Mark. There is a question I want to ask from Meta's results. In that higher spend, you had the chief financial officer saying that the higher cost is expected really because of suppliers who are sourcing from countries around the world. There's a lot of uncertainty given ongoing trade discussions. So the suppliers seem to be facing higher costs, and therefore Meta is too. Can you give us some color as to what's going on there and exactly how much those costs are rising?
Sure. So we've got about 2.3 gigawatts of construction in flight right now. That's over 100 data centers that we're building across 5 continents. We took a look at our cost numbers in January, February, March, and we're tracking April now. Year to date, our costs are somewhere between 2 and 4% on a per megawatt basis. And that's ultimately the metric we look at as cost per megawatt. So we really haven't seen a significant and pronounced rise in cost yet. But then again, you remember when we're building a data center, Katie and Sonali, we have to do that. And we think about that in 24 months and 36 months. So a lot of the generators, the UPC units, the batteries, all of the specialized componentry that we're building here at DigitalBridge, many of that stuff was ordered over 12 months ago, 9 months ago. And so, building this stuff for decades, we have a very strong command of our supply chain. But we do keep a close eye on cost. And so far, the tariff trade has actually been a really good opportunity for digital infrastructure. Why? Because our assets are resilient. Our leases are long-term. And it's not just about data centers. You've got to build the fiber. You've got to build the towers ultimately to distribute mobile data. And it's an ecosystem. And that's really the approach that we're evangelizing today at DigitalBridge.
But isn't there stuff? I mean, I heard Harold Hamm talking the other day, probably with Alex Steele, about how shocked he was that all of the actual equipment they need to pull oil out of the ground, everything from piping to wellheads is made outside of the U.S. and they need to work on bringing it back, and it's going to be expensive. What about all the stuff that you have to buy to make your data centers work? Isn't a lot of that stuff going to come either with massive tariffs or, are you going to have to bring production of it back in this country at a higher cost?
I think it'll be a hybrid of both things, right? There's certain suppliers that we need to make sure that we can make our data center construction activities continue. As I said, in the first quarter, we haven't felt the impact yet of those tariffs. We're looking here in the second quarter to see what the cost impacts will be. But again, most of what the president has been doing and the White House has been doing has been thinking about AI as a national interest topic. And we think on that basis, some of the componentry and some of the things related to AI should get a pass on tariffs at the end of the day. This is the number one priority for our country, is maintaining supremacy in the AI arms race, particularly with respect to infrastructure, which the president understands. And most importantly, he's hearing it from industry heads across our 7 large customers and across many of the investment firms that are investing in this AI infrastructure today. So far, so good, Matt, but to be continued.
I wonder, I think about the dot-com bubble a lot, and one of the problems back then was that people were just overspending to lay down cable, to lay down fiber. Is there a component today that you think the prices are a little frothy when you look at all of the things you have to bring in power and cooling, and you have to, I guess, lay down your own fiber? Is there something that you think people are overpaying for in this industry?
I don't think it's a matter of overpaying. I think what you've seen is rental prices, Matt, for the last 7 quarters in data centers have moved pretty steadily. And so if you look at the rental increases from 23 to 24 across the sector, rents were up about 18%. As we look at rents from 24 to 25, so far we've seen rental rates move up about 9%, which honestly is moving faster than inflation. Now, the question really becomes, it's about supply. This is really the challenge, Matt, that the industry faces. And again, I'll go back to the earnings call yesterday at Microsoft. You hear the commentary from Amy, you hear the commentary from Satya. There is a supply issue, and they need capacity in specific locations. If you have data centers that are ready, if you're already building those data centers, you have power, you have the specialized componentry, your supply chain is not clogged, you're going to perform well. And what we saw on display here at DigitalBridge in the first quarter is we actually met that call. And we ultimately turned on and lit a lot of capacity in the first quarter, and we're going to continue to light capacity because we've had that power in place for the better part of 2 years. Nobody talks, Matt, about the power bank. Do you have power? Do you have power at your data center campuses? And are you prepared to allow the customer to move into that data hall and light their technology? And that's what we've been doing for the last 2 to 3 years, is preparing for this, where we have an extremely large power bank today that sits at 16.8 gigawatts, and we've only utilized 5.2 gigawatts of that power. So we really sit in a strong position there, and we're not going to gouge our tenants. I've been doing this for 30 years. One thing you can't do to Verizon or AT&T or to Microsoft or Amazon is you don't use the crisis to jam them on rents.
Right.
This is going to be a relationship that we're going to have in place for 10, 15, 25 years. We've always taken a pragmatic approach to how we work with our customers. And the key is to make sure that they come back and they continue to lease with us. The only way they're going to do that, Matt, is if we provide a good service, we have the power, we have the capacity, and ultimately they feel good about being a tenant of ours.
All right, that's a good place to leave it, Mark. Always great to speak with you. That is Marc Ganzi. He is DigitalBridge CEO. This is Bloomberg. Welcome back to Open Interest. Let's break down this market right now on the 8th day of a rally for the S&P 500. You can see we have over 300 stocks in the green right now, and it's all the ones you want because we have Microsoft, Nvidia, Meta, Amazon, all leading this market higher, the biggest stocks in the index. On the downside, you have Eli Lilly, of course, out with some earnings, lowering their guidance. Apple also looking at losses ahead of their earnings. And this is exactly what you're going to see when you bring up the sector level as well. You have tech in charge up there, and then at the bottom, healthcare. You weigh it all together, the S&P 500 higher by about 1%. Now, coming up, we'll speak with Vlad Tenev. He is the CEO of Robinhood. This is Open Interest.
Now, investors flocked to Robinhood to trade the recent market swings. The stock, though, down a bit this morning, about 3.8%. They did report a strong start to the year, a jump in total net revenue, 50% from last year. Net income more than doubled. But the pace of crypto growth had slowed a bit compared to last few quarters. We're going to now bring in CEO Vlad Tenev of Robinhood. You know, while the last quarter was interesting, I'm actually more interested in what happened in April. Can you give some color around how active traders behaved in April, given how much retail activity we saw in markets?
Yeah, thanks, Shernali. Glad to be here. So Q1, as you saw, was incredibly strong for trading across the board. Also strong with net deposits, over 18 billion of net cash coming into the Robinhood platform, which is an all-time record for us. And that strength across depositing and trading has continued into April. April has been very, very strong as well. And even the new assets that we're launching, like futures trading. So we had 4.5 million contracts traded in futures in April, which is more than all of Q1. And what that shows us is that customers are taking advantage of the new products as we diversify to trade and participate in varied market environments. So futures allows customers to take short positions on broad-based indices and macro moves in commodities. And I think that became very, very useful in the market environment in early April.
Helpful perspective there. I do want to dig a little bit deeper into crypto because it looks like there was a bit of a slowdown when it comes to your crypto revenue growth. Can you put that into perspective for us? Would you still say that crypto is in high demand here when it comes to trading?
Well, if you look at our crypto business in Q1, we did about $260 million in revenue. So zooming out over a longer time horizon, that's the second biggest revenue quarter for crypto in many, many years. So Q4 last year was incredibly strong. And of course, after that, we've had a little bit of a come down market wide, but still, Q1 was an incredibly strong crypto trading quarter. And what we like to look at is market share. And we feel really good about the market share trajectory. More and more customers are not only coming to Robinhood for crypto, but for all assets that we offer. And we have now 9 business lines that are generating over $100 million in revenue. And a few more that are more nascent that we feel confident will get there.
I'm really curious about competition here. We reported here at Bloomberg this morning that Morgan Stanley is planning on bringing crypto to E-Trade. They're even looking for partners to gain scale there. How are you positioning for increased competition in this space? We know you've never been shy to shy away from rivalry like that.
Yeah, I mean, I'll tell you that we're moving ahead. I think that what we aim to offer at Robinhood is the best combination of value and user experience for crypto trading. We've been at it for a while, so we're excited to see the market share continue. And we've got a lot of things coming down the pike as well. So we have a crypto event that's happening in France in a couple of months, where we're going to be unveiling some new innovative products. We also have the acquisition of Bitstamp, which, as you know, is the longest continuously running crypto exchange, which makes Robinhood, once that acquisition completes, the longest continually running crypto exchange. That also opens up institutional business. So, you know, we see an opportunity to not just compete for retail, but also to partner with other institutions that are looking to get into crypto down the road.
I wonder what other expansions you'd make into currencies. I think you can trade options on currencies, right, or futures, but not direct forex. Is that the case on Robinhood right now?
Yeah, right now you can get exposure to currencies, traditional currencies, using various means. Most recently, you mentioned futures on currencies, which have been a popular product. You know, I mentioned earlier 4.5 million futures contracts traded in April, more than all of Q1. And futures as a product's only a few months old. So we think that that's going to continue to make progress as more and more of our customer base discovers this asset class. But yeah, there's futures on currencies, on crypto, on commodities, and broad-based indices like the S&P and the Dow.
We had the weakest April for the dollar ever, and I'm trying to gauge how foreign investors view U.S. markets, or even how U.S. investors are executing the Sell America trade. And I know that you now offer trading to U.K. clients, right? They can trade U.S. stocks and contracts here in the U.S. Have you seen any shift away from U.S. assets?
Well, what I'll tell you in the UK, and by the way, we're continuing to make a lot of progress there. That product offering keeps getting better and better. We recently launched options trading for UK customers as well. And what we're seeing there is behavior that's actually very similar to the US. In particular, what retail gets excited about is US companies that are at the frontier of innovation. So think electric vehicle companies, artificial intelligence, cryptocurrencies are very interesting globally as well as we continue to advance there. So I think the retail customer base continues to be very, very interested in being at the frontier of innovation, particularly our customers. And over the long run, I think that's going to be a durable trend.
So worst month for the dollar since 2022. I believe. Vlad, I want to talk about the month that was overall and what it meant for Robinhood, because we were joking about how quiet April was because the S&P 500 ended only about 0.8% lower, but we know there was a lot of intramonth volatility. One of your competitors, Schwab, just said that they posted their 2 busiest days ever in the past month. How active were traders on Robinhood over the past month or so?
Yeah, April's continued to be incredibly strong across the board. I talked about futures already, but equities and options are at or near multi-year highs, and net deposits has continued to be remarkably strong. We talked about 18 billion in net deposits in Q1, which was an all-time record. April has continued that, so people are continuing to deposit in April. You're seeing at Robinhood customers continuing to put more and more of their assets onto the platform. We're continuing to grow, and we're also diversifying the business with the end goal of being the place where you can buy, sell, or hold any financial asset or conduct any financial transaction. And, it's not just trading. We had a gold event, the Lost City of Gold in San Francisco about a month ago, where we launched a digital advice product. AI features were announced, Robinhood Cortex. We also announced Robinhood Banking, which will help customers, particularly at the high end of the market, engage in banking services.
Vlad, there's another service.
Plenty more coming.
That you have said you're now going to be offering in further scale, prediction markets, and it's pretty controversial on this set. I am a sports bettor. Matt does also correctly often point out it is an addictive tendency for many as well, can be very dangerous. We keep my inclinations in check here. But Vlad, what are your projections for the potential of the sports prediction markets in particular for Robinhood?
Yeah, so it's been live for about 6 months, prediction markets as a whole for Robinhood. And right now, we announced over 1 billion contracts traded. So I'd say first 6 months exceeded our expectations. It's a nascent asset class, so we didn't exactly know what customer demand would look like before we offered it. But we offered the presidential election, March Madness. We have a wide range of economic indicators, including consumer price index and federal funds rate and other things. Price of gas, we have a prediction market on that. And we've been adding more and more sports, including NBA playoffs and NHL playoffs and Masters. So it's been growing. We announced that it's right around 20 million annual revenue run rate in the earnings call. And we think that can continue to grow. I think that prediction markets aren't just interesting as an asset for traders, but over the long run, prediction markets are the future of news. Customers, retail and institutional alike, are in need of more accurate news and information in real time. I think prediction markets provide that as a societal benefit in addition to utility for traders. So we're excited to lean in there, and we know it's early, but we think there's vast potential in the asset class.
All right, well, I know it's early for you on the West Coast, Vlad, so we really appreciate you getting up and joining us on Open Interest. I hope we see you in New York soon. Vlad Tenev there, the CEO of Robinhood. Obviously, this kind of volatility provides a tremendous amount of activity for that trading platform. Coming up next, we're going to talk LPGA with Mizuho. Mizuho USA ramping up its investment in women's sports, and we're going to discuss their latest deal with the LPGA Tour with Jerry Rizzieri from Mizuho Securities USA.
All right, let's take a quick check on markets before we do that, because you have the S&P 500 pretty close to session highs right now, building that momentum for an 8th straight day. If that holds, that will be the longest winning streak since about August. We know that a big reason why we're rallying today is because of what we heard from Microsoft and Meta last night. You can see that in the NASDAQ 100 higher by about 1.9%. Some more big earnings tests after the bell today, and the 10-year Treasury yield higher by about 5 basis points. Let's take a quick look under the hood, too, because it's not just about big tech when it comes to earnings. You have GM slashing its guidance, saying tariffs will cause as much as a $5 billion hit. Shares higher a little bit, though. Roblox also higher after daily active users jumped 26%. And McDonald's sales fell sharply with consumer anxiety keeping diners away. You can see traders offloading the stock right now. This is Open Interest.
And it's time now for the Wall Street Beat. Mizuho is reaffirming its investment in women's sports. The firm just signed a 5-year renewal with the LPGA Tour and raised its purse to $3.25 million in 2026. Joining us now with more, Jerry Rizzieri, President and CEO of Mizuho Securities USA. A lot of interesting things going on in the business, but first let's talk about golf. I do love golf, so do a lot of our viewers.
You were on your high school golf team, right?
I was on my high school golf team, but obviously this is a whole other level at a time where women's sports is a very big area for investment and viewership. What is your commitment to this?
Well, first of all, I love how you can pivot from high finance to women's golf. It's amazing. Obviously there's a great opportunity for sponsors just given the increase in interest in women's sports. Actually, our involvement came a little earlier, actually, kind of maybe even before the Caitlin Clark effect. Our inspiration really was from the LPGA players themselves. We host a corporate event every year at Baltusrol. And in 2022, I was speaking with Nelly Korda, who had joined our event. She had just returned from winning the gold medal at the Tokyo Olympics, and I was struck by the contrast in her experience as one of the top players in the world versus the men's experience on the PGA Tour, just in terms of the venues, the overall player experience, obviously the purses, all those types of things. So when we were thinking about brand sponsorship a couple months later and thinking where we wanted to invest, we wanted to do more than put a logo on a hat of a PGA pro. So we thought we'd focus on women. We focused on the LPGA. We connected with the commissioner of the LPGA and shared our vision of what we wanted to do, something in New York City, super high-end, great experience for the women, but also our employees and our clients. So that started the whole process, and we engaged with Liberty National, which has been a great experience, and also shared our vision of what we wanted to do. So now we've got this great event where we have a super high purse, one of the top purses on the LPGA Tour. We have a unique format where we have the amateurs playing alongside the professionals, and it's a one-of-a-kind event. And we provide a great experience for the players, including not just a top purse, but great food. We pay for their hotels. I think 7 or 8 other sponsors are now doing the same thing. I think we maybe led the charge there. So, and we're basically all in women's sports. This is like what we're doing.
Well, talk to us a little bit about the ROI. This is something I always wonder about when I see sponsorships at big sporting events. I go to a lot of high-profile track and field meets, for example, and I always wonder, what do you get out of it? How do you measure the success of such a large-scale marketing campaign?
Right. Well, we think the return on investment is very, very high for women's golf. And here, look, we're in the media center of the world, financial center of the world. Our clients are here, so we get great participation from our clients. The employee experience is great, so it's great for employee morale. It sort of aligns with our values as a company. So there's a financial aspect of it, and we do think it's worthwhile in terms of the increased business we get from our clients. But it also is more of a purpose-driven event for us as well. So we get, I think, a lot from our employees in terms of feeling great to be associated with a firm that is sponsoring women.
I just want to take a second here for some breaking news. Excuse me for a moment. It looks like Jennifer Jacobs is reporting that National Security Advisor Mike Waltz will leave the Trump administration. So CBS News is saying that Mike Waltz and his deputy as well will leave their posts at the White House. This, according CBS, is citing sources that they're not naming. So clearly, Mike Waltz came under a lot of scrutiny, along with Pete Hegseth and others, when he talked openly about an attack on Houthi rebels in a Signal Chat, the Atlantic's Jeffrey Goldberg breaking that story, and a lot of people have been waiting for heads to roll on that, and it looks like, at least according to CBS News, that Mike Waltz is going to be the one to take the fall on this. So I think something that we're going to continue to get news on here, we're going to continue to get details, and we're going to bring you more of those. But Jerry, to get back to you and Mizuho, I think this is an interesting piece of news to come across, because ever since the purchase of Greenhill, you've been pursuing a U.S. expansion. And I wonder how having a foreign name has affected you, especially in this much more xenophobic climate.
Well, I would say that it hasn't really impacted our business at all. I mean, we operate more like a U.S. firm here. So we have a great Japanese parent. It's 65,000 people globally, $2 trillion of assets, one of the largest banks in the world, close to 40 countries. But in terms of the operations here, our competition really is the U.S. banks. So we haven't really felt that type of an impact. In fact, our business has been growing rather considerably. We're about 30% of Mizuho Financial Group's profits here in the Americas. We're about 4,000 employees. I know you had Mahal Katz on recently talking about our banking business. So our platform is growing, and we haven't seen any pushback at all. In fact, we're gaining from some of the retreat we've seen over the years, particularly from some of the European banks.
And, the numbers do show it. According to Bloomberg's data, in corporate bond underwriting alone in the U.S., you've risen to the 7th place. Now, what's the ambition? Can you break into the top 5? I mean, are there areas that you think you can surpass even the U.S. banks?
Yeah, so investment-grade debt, we've been in the top 10 for the last 8 or 9 years. So that's been one of the core components of our business. Where we've really been expanding has been in equities, fixed income, derivatives. We have a very robust financial sponsor business. You're aware that we bought Greenhill about 18 months ago. That's been going very well. So we had a gap in our portfolio. I'll call it advisory. Advisory is about 10 to 15% of the fee pool in the U.S. So that was a big hole for us to fill. And now we've kind of filled that hole. And Greenhill's great because and they're integrated into our platform. They're global. So we have 5 offices in Europe. We're in Australia. We're in Canada, U.S. So it's really a global addition to our platform.
All right, Jerry, that's a nice place to leave it. Great to spend some time with you. That is Jerry Rizzieri of Mizuho. Now, we do want to get back to that breaking news that we brought you a couple of minutes ago. This, according to reporting from CBS, that National Security Advisor Mike Waltz and his deputy, Alex Wong, will be leaving their posts in the Trump White House. This is according to multiple sources familiar with their departure, telling CBS News. We'll bring you more details next. This is Open Interest.
Let's get back now to that breaking news. CBS reporting that National Security Advisor Mike Waltz will leave the White House. He will leave his post, as well as one of his assistants. Here with us now is Kailey Leinz. Kailey, what do we know?
Well, Bloomberg has not confirmed this yet, but Matt, CBS is reporting that, yes, Mike Waltz will be leaving his post as National Security Advisor, as well as his deputy, Alex Wong, leaving a question as to who exactly might be able to replace Mike Waltz, keeping in mind that this is not a Senate-confirmed position. So the president would, in theory, have the ability to quickly appoint someone to serve in his stead very quickly without having to go through any kind of congressional approval process. But this comes after, in recent months, Mike Waltz has been under incredible pressure publicly for his inadvertent addition of the editor of The Atlantic, Jeff Goldberg, to a Signal Chat in which attack plans on Houthi rebels were discussed in the Middle East. There was much uproar over that, especially on the Democratic side, about breaches in security protocol and operating outside the traditional bounds of intelligence sharing. And many were calling for his resignation at that time. It seemed that story had quieted down some. Right. A lot of attention instead has shifted to Pete Hegseth. So this is a bit of a surprise. But again, CBS is reporting that the National Security Advisor, Mike Waltz, will be leaving that post.
Yeah, we'll continue to follow the fallout there. Our thanks to Bloomberg's Kailey Leinz. Let's get a quick check on markets here. We know it's still a big earnings day, and you have the S&P 500 actually extending gains right now, Matt, up 1.4%.
Yeah, tomorrow, by the way, it's Jobs Day. So today was huge. Tomorrow could be even bigger. Rick Reeder joins us from BlackRock, David Kelly of JP Morgan Asset Management, and the CEO of Duolingo.